we are planning to talk a little bit about the main challenges facing inclusive finance in Africa and how digitalization and mainly AI can help to handle those issues. And first, let's meet and greet our speakers. Rich Balik, CEO at Balik Group. Rich's leadership has been really instrumental in steering his group through diverse financial landscape across Nigeria and Kenya, fostering inclusive finance initiatives. I would even say that taking C-level leadership at companies like Visa and global technology partners, Rich contributed positively to the financial industry in Africa and Middle East. And here's another expert representing real lending business in Africa, Hilary Sank, founder and CEO at Fanaka Technologies, Zambia. I would say that Hilary's innovative approaches at Fanaka Tech have made really significant strides in financial technology solutions, particularly in improving services delivery to Zambia's unbanked MSMEs, raising financial inclusion in the region. So thanks for joining us, Rich and Hilary. Our attendees list includes fintech firms, banks, non-bank lenders, and anyone interested in promoting inclusive finance in Africa. So dear listeners, and feel free to send your questions via chat, and we will address them during our discussion today. Rich, Hilary, if you also have any interesting questions to raise during this discussion, feel free to do this. Before we start, there is a small fact. During the preparation to this chat with you gentlemen, I found an interesting fact that in April 2019, Google launched its first AI research center in Ghana. Perhaps you've heard about it. This event showed the confidence in AI and basically Google's confidence in AI-based products and services to tackle Africa's challenges, right? Since it's and I would say that it's quite interesting supporting fact because our focus today is on exploring how digitalization and AI impact financial inclusion in Africa. Following the communication, maybe some of you investigated the landscape of Africa recently to understand the financial capacities, calibration, environment, and so on. I recently watched an interview with the Association of African Central Banks where they say, and I can't agree more, that technology offers a chance to expand the use of financial services like payments, maybe also savings, lending, insurance. In line with this, our view of financial inclusion is about making financial services accessible to everyone, regardless of their wealth or business size. Rich, from the point of financial expert, who has contributed African financial market a lot, what do you think of the existing financial landscape and the main challenges in Africa?
Well, Africa. Well, thank you. I'm glad to be here, and nice to join Hilary on the webinar today. First of all, it's a big opportunity. You think of Africa, and you think of fastest growing, youngest continent, but it's not one business. It's not the United States of Africa. So it's 54 markets, and I think you need to know where you want to start. You need to have a good idea of who your customer is and what's the use case. I think that should be your guiding light, because you need to have, I think, a very good focal point to guide your business. It's going to be exciting to have Hilary take us through the journey he's had, but it'll be different. You'll have a plan, and then things will change once you enter the market. So I think, looking at Africa, I'm excited about potential and the potential that's been realized. I've seen it from a large multinational, Visa, who took a top-down approach in looking to bring what they've learned, technology, business models, but then also seen it from GTP, Global Technology Partners, also a U.S. headquartered company, but much more from the ground up. I think Hilary will talk about that, but you need to have people on the ground, and always, what's that? I call it the last mile, that last connection. You can have the best electric grid, the best water system, but if you can't connect that to your home, it's no use. So maybe just, those introductory comments, recognizing how big it is, you need to really have a thorough understanding of what value you're bringing and understand how you're going to bring it to the market. And that'll help you withstand the challenges of dealing with, in a mess continent, always changing, economic risks, currency risks. I'm sure we'll get into that as we continue on.
Yeah, indeed. We will discuss this a bit later. Thank you very much, Rich, for sharing your insights, your opinion on this a very important topic. When we're talking about financial landscape, it's about supporting environment, right? That helps you to promote some ideas, to promote some maybe challenges that should be solved with your ideas, right? To deliver this value. When we're talking about value, we're talking about benefits minus costs, right? And this is the value for every company or for every private individual if we're talking about the relationships between lenders and borrowers, right? In the framework of inclusive finance. Basically, talking about a landscape, I would say that Africa has made significant progress in boosting financial inclusion, mainly through the rise of digital financial services. Mobile banking right now is what I know from our partners, from you guys, from our customers, is that mobile banking is dominant due to limited fixed internet infrastructure with about 3/4, just imagine, of online traffic coming from mobile phones. And for sure, sub-Saharan Africa leads in mobile banking, largely driven by pioneers like M-Pesa. All of us heard about M-Pesa, right? Since 2007, they've expanded to offer various financial and non-financial services. So this success is attributed to M-Pesa's initiatives and partnerships with local companies, with external partners, right, and investors, and those who support them locally or outside. And following that, we say that the financial landscape plays really crucial role in succeeding in inclusive finance in the region, in supporting your ideas and in assisting you to get your ideas promoted. Hillary, from the side of the real lending business, would be really nice to listen to your point of view, because you've been working in finance for quite a long time. Now you're in the lending space, assisting SMEs in Zambia. What's your vision for Africa as the financial hub, and what main market issues could you name?
Yeah, I think that there are two sides to it. So you have traditional lenders that are banks, and you have the informal lenders that are on the other extreme.
Yeah.
Banks will have very restrictive access, especially for the informal and registered businesses. And then the predatory lenders on the other end will have very predatory, just the way the name sounds, higher interest rates and reasonable expectations on terms of picking collateral, and actually very unreasonable things like penalties. If a customer misses to pay, the penalties will go as high as 50%. We always say here at Fanaka is that the informal lenders always pray that the customer doesn't pay so that they can sell the collateral. But that is what a fintech company like Fanaka is trying to solve, is sit in the middle. See what bureaucratic ways are being practiced by the banks that can be reduced, and what predatory lenders are doing that is unethical, and try to bridge that gap. So if, for example, you go directly to digital lending, that will pose a little bit of a challenge. So that is why Fanaka offers an agent model, kind of, to produce a touch point to these customers and to produce a way for us to access risk and be able to take these informal traders and MSMEs as our customers. Thank you very much.
Thank you very much, Hillary. During our discussion, when we were preparing to this communication today, you touched the point of proprietary data, right? In-house data that might be used to inform decisions, especially when we're talking about an underbanked customers or unbanked customers, right? Because this is the part of inclusive finance in the region. Do you support the idea that proprietary data, your data, like data of your business, plus AI, allows you to make informed decisions and assess credit worthiness of your customers or potential borrowers?
Yes, so you have a number of things. So you have the data that you're actually collecting out of the customers, and then you also have the data that the performance of that customers or how they behave in terms of repayments. For us, we try to encourage customers to make small payments towards their loans at every interval of their choosing based on the income that is coming through. So taking the data that we just got about themselves, about the business, and the data on the behavior, and loading that into AI, we start seeing interesting things. We start seeing AI giving us pointers in terms of this looks more risky than this because of this. If this variable change this way, you should be able to get better borrowers. So I think that AI stands a very good chance in terms of helping us become better lenders, and also going into what we hope to get to, which will be smart pricing based on risk. And we can't get there without the help of AI. Thank you.
Thank you very much, Hilary. You mentioned a really good phrase. AI helps you to become a better lender, especially when we're talking about really competitive environment, right, in Africa, especially when we're talking about challenging emerging markets, when we're talking about great volume of unbanked to underserved clients, right? So that's great to hear that AI really contributes your existing business as a lender. And for sure, it also brings the understanding on the table that being a lender isn't a straightforward task, right? You're always in a challenge to find proper solutions to your customers, right? Not to lose any application you're receiving to your business, right? And grow your portfolio, mitigating the risks. So that's great that AI also assists you with risk mitigation, right? Risk-based pricing, as you mentioned, just to adjust your offer to different client groups, right? And different audiences. When we're talking about landscape, when we're talking about existing opportunities that AI may bring on the table, the digitalization may help you with, right? When you're doing finance, consulting, lending, insurance, and all the financial services in the region, we also don't overlook regulatory support. In Africa, leaders and policymakers are really pushing for financial technologies like mobile banking, mobile money, and new tech such as AI and distributed ledgers to enhance financial inclusion. This is crucial for sub-Saharan Africa, where around 400 million people lack sufficient access to financial services. This is the fact. So, Hilary, this is the question to you, Rich, if you don't mind, because Hilary represents in real lending business, and this is like a relevant question to a lender. Hilary, in your opinion, how do local regulations impact both the advancement of traditional and alternative lending practices?
I think the regulatory space is trying its best to try and catch up, because I think technology is also moving much faster, and a lot of regulation is governments. So in Zambia, for instance, the regulatory landscape is significantly improving from traditional lending to try and foster growth and while safeguarding the consumer. So they have put together group that is under the Security Exchange Commission that is able to help. They have built these sandboxes that fintechs can test their products within them with much less regulatory eye, to just allow them a little bit of flexibility before they are able to move forward. And also one thing that I really like about Zambia, they have different regulation based on what you are doing. For example, if you're just a lender, the regulation you need will be much lower than when you are taking deposits. Because when you start taking deposits, the government will have to protect that deposit. Now you will have to be regulated by the central bank. As lenders, we are regulated by the magistrates courts and also the Ministry of Finance. But when you go higher, when you start taking deposits, you will now have to be regulated by the Central Bank of Zambia, for example.
Sounds really interesting.
From country to country. Digital lending is regulated by the central bank in Kenya, for example. So this is different based on the country.
Indeed, there are really a lot of regulations and supporting documentation in terms of digitalization, right? all the initiatives like documentation, regulations, sandboxing, the fact that supports that really regulatory bodies, they appreciate all the initiatives, and they create this environments, right, where everybody like fintechs may promote ideas, show experiments, and based on the results of this experiments, right, government and fintechs may agree on further promotion. And the fact that it works like sandboxing and digitalization and AI promotion in the region is confirmed by a really interesting piece of statistics. I would say that imagine between 2020 and 2021, around 40% of Africa's estimated tech startups operated within the fintech sector. Right? So companies that bring technology to the market, a technology backed by digital solutions, right? By AI, by any other proprietary technology that allows to increase the access to financial services or to product and services that are the fit for this market, right? So this really indicates a strong emphasis on financial technology and innovation, which is supported by the local regulators and government institutions. Rich, in this case, following the discussion regarding the regulations, and bearing in mind your really extensive experience and work on different companies from the point of finance, from the point of payments, right, from the point of government institutions, from the point of collaboration with big banks in Africa. Do you hold a different perspective on how regulations influence both traditional and alternative lending practices in Africa?
No, I agree with the approach Hillary has, and it's needed. The regulations are, you need them, but you also need to find a way to work with them. They confine, but they also provide structure. Without the regulation, it would be difficult, I think, to scale up a business. So it's understanding, really understanding the product you're offering, coming back to the use case with the customers. So then who's going to regulate your product, and having that relationship established. And I think making sure you know that regulatory environment in each of the markets you work with, and also understand how that impacts your business model. I think one of the biggest challenges for fintechs in Africa is being able to think outside of their business and understand how they are providing inputs and outputs to the other players in the value chain. How do you make your money, and how do your partners make money as well? And as you go through that solution of your business model, you have to make sure at the end there's enough for everybody to succeed, and that you're doing it in a way that the regulators are going to keep putting the green lights up. But I think you have to be it's a balance. It's an art. You have to be in some ways proactive with the regulators, so you don't surprise them, but at the same point, you don't want to unnecessarily raise yellow flags that would, create attention. So I think it's something that, in listening to what Hillary said too, it's an iterative process, and the sooner you can start cycling through that and get experience, almost weekly. What did you learn this week? Okay, how do we improve and be ready to refine your product? So I think you have to treat regulators as one of your stakeholders and have a program to actively manage them and meet their concerns.
Okay, thank you very much, Rich. It's like about breaking the barriers, right? Promote collaboration, promote partnership, which is really crucial to deliver the ideas in place and to really fix any challenges that appear during the process of this delivery. Gentlemen, if you don't mind, during our communication, we will get back to our chat, because our listeners, they are sending us really interesting questions. And some of them might be addressed to the entire team of us. Some of them should be addressed to a specific expert. And let's cover some of our questions we got to the chat before we move forward in our discussion. The first question we got is from Joshua. Joshua asks, how do you make sure there is inclusivity for customer with bad credit score who don't have collateral or can't get credit loans or collect full amounts for payments? Interestingly, this population is approximately 60% of the population. point is quite interesting. I have an answer. However, it would be really nice to listen to the real business, London business opinion. Hillary, maybe you could comment this question.
Yeah, I will give you a straight example. We lend to small and medium businesses. One of the things we try to find out through our financial literacy training is to figure out where money is coming in. Remember, even if we are doing it monthly, we encourage our customers to start paying as soon as they receive the money. What that does is that it reduces the pressure at the end. Because if you leave and you want to collect the full amount at the end, which is what a lot of our digital competitors will do, that will bring pressure. Because if you're talking about $100 for somebody that makes $2-3 a day that needs to be paid at once, that is sliding towards wishful thinking, and it becomes very difficult. So figuring out what works for them, and that is what we try to do. What does it work for you? How much can you pay on a daily or a weekly basis? And moving in that model, we have seen that to be successful. And even in the last weeks, we are talking to customers, interviews, as one of our partners' requests. One of the things that we are finding out when we ask our customer, what do you like most about the product? They will say, the chance for me to choose how I pay. And that is what we try to use to mitigate for that risk.
Sounds really interesting and really flexible for every customer you're serving, Hillary. It means, and the answer to our listener is the following: select the vendor who is really looking for meeting your requirements in finance and can adjust their offer to your existing credit worthiness, payment worthiness, and financial capacity, right? That's about inclusive finance. That's about seeing the borrower himself, right? Not maybe through the personal communication, because we are aiming to optimize the processes, we're aiming to grow fast, right? And it's about digitalization. But considering technology in the way it really helps to see the borrower himself or herself, right? And being able to estimate their capacity to pay us back in a comfortable manner, right? In the way where both sides, a lender and a borrower, they win in this collaboration, a win-win strategy. So Hillary, thank you a lot for this really contributive reply, and the idea of risk-based financing and adjusting and making payment conditions for a borrower is really flexible and customer-oriented. Rich, perhaps you have something to add to this discussion.
Yeah, I think what you see too is you want to keep engaged with the borrower and not lose track of them. And what you can do, and I think what AI can help beyond the risk scoring, is from an operational standpoint, help them design their payment plan. Then they become engaged and invested in this process as well. I mean, they came to you for a loan, they have a reason for it. If you kind of bring them inside, so that it's not like you're trying to find them, but they're already involved in the process. I think AI, again, beyond scoring, can help you develop engagement models with the borrower and help them provide a plan that's going to, like I say, go beyond wishful thinking. What can they deal with? Plus, you're gaining more and more data. I think that's fuel for your AI algorithms. And I think what I'm also saying is think about how you integrate both the lending side and the operational side. They don't necessarily have to be silos that don't talk to each other. When you put the two together, you may find a better approach of communicating with your customer results in better repayment.
Indeed, absolutely agree with you. And this is not only the question of good communication, right? It's also the question of acceptance of the existing situation in terms of non-bank population, right? Population that really lacks finance to serve their daily needs, right? Or when we're talking about MSMEs, right? Or SMEs. That can't access finance properly, but they need this finance to develop their business. Currently, if to take the official statistics, over 40% of Africa's population lacks banking access, with around 90% of transactions still conducted in cash. We're talking about the fact that companies and businesses, traditional, non-traditional lenders, who take care of financial environments, who provide financial services and lending in particular, they really should be aware of the situation. They're aware of the situation, as we discussed with you. Like 30% of existing SME, like businesses opened a couple of years ago were from fintech sector, right? As of now, when we're talking about who cover this market, besides traditional banks, there are a lot of alternative lenders who are really willing to support the local environment, the local population, and the local businesses, right, through their lending services. And Hillary's company is one of those examples. But we're also talking about the big sharks, right, who set trends. For example, we can talk about PayMob, global provider, payment provider who does buy now, pay later. We're talking about Trade Depot, retail lender. We're talking about Monty Holding. We're talking about Time Group. They are really closing this gap between lack of financial, lack of financial services, right, for unbanked population, and digitalization point, and how to match both of these factors to satisfy the needs of the local population. We're also talking about smaller lenders like Fanaka Technologies, like Wonga, Atlas Finance, Wyman Bank, and others. They're really contributing to the effort of raising financial inclusivity in the region. And really, this movement is fueled by technological advancement. So we hope that we answered Joshua's question. There are some other questions in the chat, so we will get back to them on the go. Don't worry, dear listeners, so feel free to send your questions to our chat. We'll get back to them later on. So we covered a lot regarding the financial landscape, supporting environment, right? About the fact that business and lending should be really flexible in terms of approaching the needs of their clients, especially when we're talking about banked and unbanked population or businesses, right? Just to increase the access to financial services. Hillary, for years, Fanaka has provided inclusive finance for local businesses in Zambia. Whether digitalization helps right now, especially in the framework of your business, right? From the point of your company as well. Whether digitalization helps in lending, and how technology helps or maybe disturbs inclusive finance for unbanked and underbanked population and micro businesses.
Yeah, I think that that digitalization helps, but you have to figure out where do you use technology, where do you still use human touch points. A lot of companies have closed down in Africa, and even in this market. We've just been told about a competitor that closed down last week because of fully going digital and forgetting the how to be able to get the money back and collect. So there's a rapid growth in terms of the buy later models. There is lack of comprehensive reporting into CRB, into the credit bureaus in these markets, and that is something that we have to know that is there. And then also there is a need of more oversight, because these businesses have to be sustainable on themselves, because as much as the business fintech solutions like us will provide quick access to finance and will process these loans within the shortest time, but the challenge is that you don't know mostly about the over indebtedness and the ethical part of it. Some people pay, borrow from John to pay Peter, and if that continues, it's just a wave of somebody continuously paying interests and not being able to benefit from this. So as we are moving towards improving these unbanked and underbanked populations, we hope to get to a more sustainable solution for them. And at Fanaka, we recognize these challenges, and we are addressing them at the point of design. So as we are designing even our financial literacy program, we are inputting questions there that are actually telling us about the customer and their behavior. in lending, you have two things. You have the ability to pay. Are they able? Do they have, and the willingness to pay?
Yeah.
So, ability can be there, but they are not willing, or they can be willing, but there's no ability. So our balancing of this through our educational platform, as we continuously get to a place where you have a customer that has an ability and has the willingness, now we shall start winning going forward. Thank you.
Absolutely agree with you, Hillary. And the point of view from real business makes sense today, right? Because as we discussed, there are a lot of different people among our attendees today, including not only businesses, real businesses, but people who may be struggling as of now to get financing. So your point of view might be interesting for them to consider existing opportunities opened in Africa to satisfy their needs. Thanks, Hillary, for your insight. This is interesting point. And what's on the side of financial experts? Rich, what's your idea of digitalization in lending, or say in finance, right? Totally, because digitalization right now in Africa is happening not only in lending, right? It's everywhere. We will talk about interesting facts and big sharks investments there. So what about your idea for digitalization and inclusive finance in Africa?
Well, I think it's very well accepted in Africa. I think about the evolution of finance in Western markets and just how information was shared, and or think about payments. You had paper, and then you had credit cards, and you had paper slips filled out, and then you wound up eventually getting to digital forms of payments. Africa didn't wait for that. It leapfrogged, and in fact has been a leading innovator if you look at mobile money. So I think the markets and consumers are receptive to it. The challenge for fintechs providing these services is to be smart about how you can digitize a lot of the back office to reduce costs, improve accuracy and speed, while keeping a friendly face in front of the customer, that the storefront, you're always giving them a warm welcome, that they don't lose track of who the people are behind the business. So I think it's essential. Digitization, I think it's essential to deliver services accurately, quickly, and at the most efficient cost. I've seen some comments here about the cost of products. I think digitization is essential to take cost and time out of the process. But my caveat would be just be aware that how would you like to receive this? Would this make sense to you? Or one thing we used to say before is, would your mother understand this? If you explained it to your mother, would she feel comfortable doing it? But I think Africa is ready for it, and I'm excited about what AI is how it's going to evolve in Africa. I look at what was done with mobile money. I can't wait to see how Africans develop, utilize, and deploy AI in lending and other fintech products.
Yep, absolutely agree with you. I can't agree more, Rich. Thank you very much for this extensive point of view. Hillary, there is a good hint for you. Once launching any new service or product, try to test it with your friends or family. If they can get it, easily launch it. So yeah, at this point we're talking about accessibility, right, of our services. We are talking about the fact that inclusive finance is not only about access and, for example, capacity or willing to pay or willing to get the service, right, or willing to provide payments. So after the service was received, a product was sold to this particular client group, right? What I've got is that basically you may have a look at our chat. There is really a hot discussion happening between our attendees regarding existing financial inclusion, regarding what's happening in Africa. Somebody supports the idea of inclusivity, somebody doesn't support it. Some attendees also shows the fact and the necessity to use some models that include information not only about African market or African clients' habits, right, but also some external factors and criteria. We really tell about the option of leveraging AI to take into consideration different criteria, different data sources, right? From inside, from outside, to understand better our clients' behavior, regardless whether they're individuals, whether they're corporate clients, right? And this sort of data might be reused for building strong predictive models that will analyze clients' behavior, that will predict potential events happening with these accounts that we are planning to approve, that where we are planning to disburse money, right? Hillary, as you mentioned, the idea of lending business is not only money disbursement, but also about taking care of how you will collect this money afterwards, right? That's why the concept of risk-based financing works well here, because you're protecting clients, right, for whom you are disbursing loans, and you're protecting your business, right? We discussed the win-win strategy. So inclusive finance in Africa or any other developing markets is about win-win strategy, where using technology, we really may help our clients, but we may also stay competitive in the market and earn from doing this business for our target audience. I would say that using AI for additional data analysis, for empowering our decision-making process is not a new idea, to be honest. We discussed with you existing market players in Africa who already provide digital financing. I would mention a fact, for example, a good company, a good example of a company in Africa who already utilizes AI to empower their decision-making process, Juma World. Maybe you heard something about them. They've successfully enabled micro-lending. They used AI to assess SMEs' credit worthiness. And their approach is backed by data from Mansa Bank and MT Mobile Financial Services. Basically, it allows Juma World right now and to provide financing to more SMEs in Ivory Coast to allow them get short-term loans, right? So here we tell about the fact that really supportive environment where you can find companies who can give you data, who can give you support, who can give you assistance in your ideas, right, may contribute the raise and the development of financial inclusion, as it happened with Juma World. When Mansa Bank and MT Mobile Financial Services supported this company, right, raising the financial inclusion in the region at Ivory Coast. But digitalization, it's not only about accessing, right, or raising the access, it's also about cutting the operational costs. A good point mentioned by Lillian Barnard, president of Microsoft Africa. She said that AI-powered digital lending streamlines credit assessment, potentially reducing costs across the financial services ecosystem. So here, it means cost reduction and the raise in lending affordability, right? Less money a business spends on delivering the service, right? Less hidden costs will be provided in the final service or product to a customer, right? So at this point of view, from the side of real business, Hillary, what do you think of implementing AI to fight financial exclusion in the region, maybe even decrease poverty level and raise access to financial services?
I think implementing AI is going to be important because, for example, I'll just give a real example. Initially, when we started, we had somebody looking at this data as they came in and looking at the different figures, comparing and calculating and figuring out how those figures affect how much we should be able to lend to that customer. And, just remembering all that data and being able, we could do that when we had 100, loans being processed, but now we are moving to 500, 1,000 loans. It becomes very difficult. And who can remember that better than AI? So that kind of having that knowledge, it doesn't mean that, there needs to be a balanced approach. It doesn't mean that now you do everything and you let AI make those decisions. I have had situations in my past where in the insurance sector, when the satellite imagery gave an estimation, for example, of rain, and said they are not going to pay payouts in that area. When that was told to a farmer said, "Can you bring Mr. Satellite here so that I have discussion with them and show them what I received from my farm?" So that needs to be a very balanced approach on that. There is a top-down kind of approach that we talked about initially, where a company will come in with heavy AI machinery trying to deploy, even without feeding it the data that you want it to know to be able to make decisions. And ultimately, they won't make it. But being able to combine all the data coming in and passing it through, using AI's power to remember all that information and to start guiding from the data that is feeding from what is coming from the ground, and with time dropping some of the current costs and current needs to a level where you can confidently say that after 3-4 years I can pass it through here, and whatever comes out I can trust it. It just takes time to get there.
Yep, it takes time to get there. Absolutely agree with you. When we started with Fanak attack, if I do remember correctly, Hillary, you raised the concern about the potential risks, right? That AI or digitalization bring to the table, right, to the business. Because when you optimize the process, when you'd like to reduce costs, when you'd like to deliver better services to your customer, right, to become a better lender for your client, you should always you should also be aware of potential risks that this technology may deliver to the process of lending at your organization. So I would say here that there are a lot of risks around any technology in the market, right? And some of our attendees raise questions regarding how this inclusion may help in case businesses don't want to collaborate, in case businesses don't want to get engaged into technology. Their answer is to understand what this business wants, right? If this business wants to do this business, they will be able to brace themselves to get acquainted with new technology, right? To understand how it may help their business, their company to introduce services to larger target audience, right? And how this service, improved service, can help their audiences. It's about the willingness, as you said, Hillary, right? It's about the willingness to become a better lender. If you don't want to become a lender, you won't, you wouldn't like to get introduced to new technology, right? You will not show this interest in introducing technology to serve, to provide better services to your customers, and so on and so forth. So it's about the readiness, right? And the openness to change your mind for this part of time, especially after AI and digitalization were officially introduced. This a couple of years ago, right? Many years ago, online dating have been introduced. AI officially and generative AI was officially introduced by OpenAI during recent years, right? This is AI revolution. You should be aware of this always. And if you want to be competitive in the market, think about how you can become a better lender. And this is the better recommendation we can give today, not just from the side of experts, but also from the side of real business. And Hillary, thank you. This is a really good motto for every company when you become to be a better lender. When we're talking about AI, we also understand that it really enables more informed decisions, right? We take predictive analytics. We may also use AI to optimize some processes. It depends on the type of AI you're selecting to get introduced to your financial services and for processes. We should also remember that the digitalization and AI should be responsible. And it's about how we implemented this AI, right? AI should not also be responsible, but also should be tailored to specific business needs, right? As we discussed. If you want to become a better lender, think of how this technology may help you. It's about tailoring the idea of AI implementation. Responsible AI idea was really nicely introduced by our partner and Fortune 500 company, Accenture. They define responsible AI as designing, developing, and deploying AI with good intentions to empower employees and businesses, while also ensuring fair impact on customers and society. So here we may say that integration or integrating responsible AI with inclusive finance is set to improve the African financial landscape, boost tech awareness in finance, and reduce financial exclusion. Following that, Rich, we discussed a lot about how AI digitalization may help, whether it may reduce costs, why every business should take into consideration digitalization, digital tools, and AI, right? And what's the purpose for taking this into consideration? What do you think of implementing AI to fight financial exclusion? especially in the African market?
Sure. It has to be one of the tools you're looking for. I think of it, and maybe turn it around. First, look at to help you not provide answers, but to make sure you're focused on the right questions. And I do have this model in my mind of initially treating it almost like your lab, because you're still learning about it. And you want to be confident about what AI is helping you understand about your business before you expose it to customers or other partners. I think you're going to need to do it because effectively understood, designed, and deployed, AI gives a company a competitive advantage across the P&L. It's for generating revenue, reducing costs, reducing risks. So you need to do that. But I'd first start off and say, I'd use AI to help me understand, am I asking the right questions about my business?
Mm-hmm.
And then find a way, very tactically go after specific answers, and that'll help you get comfortable with using the tool, help you find ways to collect data, and get some success stories that you internally can feel confident about, that then you can understand how to scale those up. You're understanding what data you have and how to use it. And then you find a consistency to both delivering that specific service. It could be a customer service call out. It could be an aspect of a collections, and then keep iterating. You give yourself milestones. They may be weekly operational milestones and monthly, but you're learning about this. And I think what should never change is your goal of gaining greater efficiency, profitability in your business, but understanding tactically how to best deploy AI. And then I think when you've done that, you're sharing it with external parties, with partners and customers. I think you need to make sure they understand, do they see it the same way? Are they getting the same results? Is there that aha moment that, oh yeah, I get it, and this is good.
Yeah.
So I think about it in stages. It's kind of the lab, there's a deployment, and then you begin to look at not just how you're using AI within your business, but can you find ways to connect with partners and suppliers, how they're using AI. So there's that evolution. And I think it's something I think a lender's very comfortable with. As you develop models, you always have this evolution. You're going to find the same thing with AI. It's not something you plug into the wall and voila, you have it. It's going to have to be understood, adapted, and then deployed again.
Thanks, Rich. It sounds like really AI impacts everybody, employees, companies, ordinary people, stakeholders, shareholders, and everybody. Hillary, I have a question to you outside our main agenda. The logic of responsible AI is clear, right? What's your opinion on responsible AI, and whether you agree that every company, let's talk about lending business first, every lending company which is willing to become a better lender and provide better services to their customer, should be aware of responsible AI, of digitalization, and should really take into consideration how to implement digitalization and responsible AI into their businesses. What's your opinion on this?
I think AI as in
Hillary, we lost you for a couple of seconds.
Oh.
Can you hear us? This is quite a comprehensive question that takes some time to get addressed. So that's not a problem. We may wait when Hillary joins us. So I would say that talking about responsible AI, it's about protecting the rights of those who are in it, right? That it's about protecting access to data, because any AI that might be implemented requires some data, right, to get uploaded for any analysis, for processing, and so on. Many companies right now are willing to raise these compelling questions, to discuss them, and to apply measures to work with these questions accordingly, right? To work with AI in accordance with the concept of responsible, ethical AI. Last week, and I should say that many big sharks and many companies are supporting this idea and provide investments and do some efforts towards this approach. Last week, Rich and Hillary, I hope Hillary hears us, a partnership agreement was signed between U.S. Commerce Secretary Gina Raimondo,
Yep.
and the Kenyan government to promote tech growth in Kenya. And what I got, this allows US firms to invest in AI and data centers, fostering innovation and infrastructure development in East Africa's largest economy. So we say about the fact that this collaboration really empathizes data flows and digital upskilling, showcasing technology's role in driving the social economic progress, impacting inclusive financing in Africa, right? Impacting digital literacy, empowering this region, and addressing potential infrastructure and data storage challenges. So responsible AI, it's about also the readiness of particular audience, of particular environment and landscape to address risks and problems that may appear, and to be able to do and employ some measures, right? Provide some measures to address these problems and questions beforehand. Hilary, let's get back to responsible AI. So would you share your opinion on it?
Yeah, I think that responsible AI is important, especially for any lender. One of the things that is actually very, very common, we try to do this even by ourselves. We try to think about how will tomorrow look like. So a lender, it's very important for a lender to continue learning and continue teaching the AI to be able to tell them how tomorrow will be. Because as lenders, we give our capital out. For example, a SaaS model, you don't give out your SaaS. People pay subscription. But for us, it's an interest business. So we send our money out there to try and get more money. And within a short time, you can lose the capital. So how do you protect your capital while making sure that you are also growing as a business and you're growing your customers? So number one is, what data are you collecting? You collect enough data, and is it enough to now start running it through predictive models? And now, based on that, AI will not go and pluck things from elsewhere. Say, based on what you have given me, I can tell you this will be or this will not be. And then with that, you take that chunk, you repeat, you test, you repeat, you test, until you get to a point where you're more comfortable. So I think that, being able to throw in data and tell it, one of the things that, that over time we need to keep testing. A customer will get a first loan, pay very well, second, third, and then they start defaulting on the fourth one. You will, from an AI perspective, that was already a good customer, and maybe now we have approved a bigger loan to them. What happens? So there's that need to touch point and to understand how businesses are going. For example, here, when we started last year, we were doing very well, and then there was a cholera outbreak, and all markets were closed. So the informal lenders did not go to the markets that time, and we had to restructure some of the loans to be able to make sure that we are catering for them. So I think that AI is big and will continue to be big in the lending space. As we continue to collect data, as we continue to learn about the customers, we will be able to get the power of it in a much better way as we move forward. Thank you, Victor.
Noted. Really interesting and correctly, fully agree. Can't agree more, Hilary. Thanks a lot. Any risks, any technology implementation is associated with potential risks, right? You should be aware of those risks at the step you are starting the implementation. So perhaps when we're talking about, say, implementing AI in lending for assessing credit worthiness, or consider any other implementations of AI, maybe in debt collection processes and the processing of clients' assessment, right? Offering or counter-offering any alternative services, maybe even retaining our clients, right? Using predictive analytics and AI-based tools. We're also talking about the fact that we should have a good shoulder on behalf of represented by our vendor, right? A solution provider who has extensive experience in the market, who can support us on our way of implementing this AI. Hilary, I guess you can agree with this, right? Because you've recently implemented AI yourself, got enough support in this, and raising questions is also the very crucial point, right? for every business. If you don't get how to do this, ask, and this question will be answered. There are not many companies, to be honest. So we may say so. There are different companies in Africa. Some of them support AI and digitalization. Some of them not. They are haters, right? But they have this right to think so, and don't be aware of any technology, or don't agree with the ideas that the digitalization and AI really help the process of raising financial inclusion. But we should always remember about this concept of responsible AI, about the fact that inclusive finance during this time right now is impossible without technology, unfortunately, right? Due to the growing impact of data, due to the growing impact of technological progress, right? We are overseeing as of now. So yeah, this is the point. So wrapping up our discussion, there are three main points, pinpoints to note that we came through during the webinar. Point number one, and Rich, Hillary, if you want to add something, you're more than welcome. In my opinion, there is point number one, that inclusive finance in Africa is technology driven. This is the fact. Fintech startups across Africa drive really inclusive finance with digital lending and payment solutions, showcasing technology's role in financial inclusivity. Pinpoint number two is that regulations and a supportive financial landscape are important, right? There are many examples, a lot of them, in Zambia and Kenya, in Nigeria, in other markets where collaborations make a big deal, right? Promoting a new technology, making it less scary for the business environment, right? And allowing more businesses to get involved into this digitalization process for finance and lending. So, for example, if we're talking about Nigerian and Kenyan markets, right? Most advanced one according to the African experts in terms of technology and innovations. We are talking about, for example, regulations like Ghana's National Payment Systems Act, right? Or the same one from Nigeria. Those acts really foster AI adoption in finance. They promote innovations like AI-based credit scoring and compliance systems for broader financial access. So it's about collaboration. It's about the support of local regulations to promote AI technology, because everything goes from head, right? Goes from head and down. And the feedback you're receiving from ordinary businesses might be really reused for improving technology environment in the region. And the final point, point number three, is that implementing AI for risk mitigation and inclusive finance requires an experience-based and really data-driven approach. We talked about this much. Data we're using, right, to empower our AI agents, to empower digitalization. As Hillary said, data might be also used to introduce risk-based financing to the customer, right? To just have a look at the borrower's behavior, right? Have a look at what he or she is doing with this financing, right? Take into consideration transactional data and everything, and conclude the portfolio, do the segmentation, create the picture of the business, of your business and of your customers, right? And be able to make informed decisions. And for sure, it's possible when you have a reliable shoulder. So for a financial business, it means having such experience-based implementation means that you should have a reliable solution provider with a proven track record of responsible AI implementation is in your region, in your market, right? Who's aware of how to implement AI for your win-win strategy, for helping you to become a better lender. So, Hillary, Rich, maybe you have some more points to add while wrapping up our discussion.
Sure. Just I have two. I think early on, understand, Africa has 54 countries, many thousands of languages. This is a new one you're going to need to understand, AI. You're going to need to be able to speak, comprehend. And second, AI is not going to be a miracle cure for your business. You have to have the right business model. I think about what Hillary's built. Great. It can make it better, but it's not a magic pill you take and all of a sudden your business is better. You have to be, this can help you improve on it. So I think those 2 points, it's something you definitely need to incorporate in your business if you're competing as a fintech in Africa today.
Sounds as really good add-on, Rich. Thank you very much. Hilary, what about you from the side of financial business? Do you have something to add specifically to our conclusion?
I think our conclusion goes back to the third point, where we're talking about experience and data. You have to bring those on the table of AI. Think of AI as a third person. When you're coming to that meeting, you need to come with experience and data, and you can have a fruitful discussion.
Great.
But if you come empty-handed, thinking that AI will magically solve all your problems, you might be
without your involvement, right? Without your involvement, none system will solve your problem.
There's really nothing that you can be able to do. So thank you.
Right.
Great point. Thanks, Hilary. And by the way, gentlemen, there is really hot discussion, as I said, right, between our attendees. I should say that, dear listeners, after this meeting, all of you will receive our follow-up email with the contact details to access Hilary or Rich and get in touch with them directly to receive their expertise or to talk about potential collaboration. So for those of you who are interested in financing, right, representing customers segment for today's meeting, for those of you who are real businesses and are willing to integrate AI, don't worry, we will get back to you afterwards to deliver the dream service that you're looking for. So there are no more questions in our chat. I should say, however, our hour is drawing to a close. Hilary, Rich, thanks a million for sharing your invaluable insights with us today. Dear attendees, thanks a lot for being with us during this hour. It was really a pleasure to have you in our chat, in our discussion. We hope you've enjoyed this hour. For businesses, real lending businesses, financial businesses, not only lending businesses, who are representing the business segment, we are inviting you to get acquainted with AI, maybe to become a better lender, maybe to become a better finance company, right, and non-financial institution. We're inviting you to get acquainted with AI and ensure in its effectiveness in raising financial inclusivity and growing your business. So all registrants will get a follow-up email, not only with the wrapping up abstracts and words, but also with the access to GiniMachine AI, our solution that already empowered a lot of businesses in Africa. So don't worry, don't be shy, send us your questions in reply to our follow-up. And main challenges you are facing in your business, we'll be glad to help you and show how AI implementation may assist you in solving those challenges. Hilary, Rich, maybe you'd like to add something because we are already leaving.
I'm good. Thank you. I enjoyed it very much. Pleasure to be part of this group.
Great.
Thank you, everyone. I think I also enjoyed it very much. Reach out in the follow-up email. Our contact detail will be shared. Let us know what you're doing. Let's know if we need any advice. So this was a very good panel. So thank you, guys.
Thanks a lot. The recording will be shared, by the way. So dear attendees, don't worry if some of you was not able to join. You will receive a recording of our session. Hilary, Rich, take care and have a blissful day ahead. Bye. See you soon.
Bye-bye.
Thank you, guys.